In Q3, we also marked two important milestones for Wipro, which I'm very proud of. In December, we completed 80 years as a company. And in October, we celebrated 25 years of being listed on the New York Stock Exchange. In fact, these milestones reflect a legacy of strong governance, values, and integrity, a foundation of trust that continues to differentiate us with our clients, our partners, and our investors. Now, turning to Q3 performance. Our IT services sequential revenue at $2.64 billion grew 1.4% on a constant currency basis. Excluding Harman DTS acquisition, our revenue grew 0.6% in constant currency terms. In fact, growth was broad-based with 3 of our 4 markets and 4 of our 5 sectors reporting sequential gains. Americas 1 delivered sequential and year-on-year growth, driven by strong performance in healthcare, consumer, and LATAM. Our Americas 2 saw a sequential decline. Europe grew sequentially in Q3, led by ramp-up of the earlier announced mega deal. We are also seeing good traction in the UK and the Western Europe markets. APMEA grew sequentially and year-on-year, led by India, Middle East, and Southeast Asia. BFSI continues to show strong traction with ramp-ups and new wins. Capco revenue was impacted by furloughs and remained flat year-on-year. Our operating margins at 17.6% expanded 0.4% or adjusted Q2 margins and 0.1% year-on-year. We also closed $3.3 billion in total contract value and $871 million in large deal bookings. If you recollect, last quarter, I introduced Wipro Intelligence. You would have seen the video, and if you remember that. It is our unified approach to delivering AI-powered transformation across industries that we serve. This approach is anchored on 3 strategic pillars. 1, industry platforms and solutions. We are building consulting-led AI solutions across sectors. For example, platforms like Payer AI in healthcare, Net Oxygen for lending, and AutoCortex for automotive. These solutions help streamline operations, improve our customer outcomes, and open up new avenues for growth. Second, our delivery platforms accelerate AI adoption at scale. I talked about Wings last quarter. Wings brings AI into the heart of our operations, from application management to infrastructure support and business process operations. Vega, another delivery platform from Wipro Intelligence, adds AI-driven capabilities across the development lifecycle, be it software development lifecycle or product engineering development lifecycle, and from vibe coding to model tuning and data pipelines. Together, these platforms help our clients modernize faster, operate smarter. Third pillar is the Wipro Innovation Network. It connects our labs with partners, startups, universities, and deep tech talent around the world. This ecosystem helps us explore new technologies and build solutions for the future. In December, we launched innovation labs in 3 cities in the US, Australia, and Middle East, expanding our network, growing our global footprint, and strengthening our role as a trusted innovation partner. We are also partnering with client GCCs to help drive transformation and turn their cost centers into high-impact innovation hubs. Now, let me share 2 examples of the large deals that we have won leveraging Wipro Intelligence last quarter. First, a leading global education provider in the UK, which is expanding rapidly across markets, has chosen us as its strategic partner for a multi-year transformation. Their goal was to build a single, secure, intelligent operating model that can scale with their growth and improve stakeholder experience. Using Wipro Intelligence Wings, we will standardize all their core processes, embed automation and AI-driven insights, and helping optimize costs through their global delivery model. In my second example, a leading US-based fitness technology company has selected us for a multi-year transformation to accelerate their shift to a subscription-based wellness model, which is actually catching up, and support global expansion. Here, we will use both the delivery platforms, Wings and Vega, to embed AI and automation across their IT infrastructure and all of their core functions, helping drive efficiency, productivity, growth, and of course, customer experience. These engagements highlight a clear trend. Our clients are bringing us in much earlier and recognizing the step change in the way we deliver and innovate. I would now like to update you on Harman DTS. First of all, a warm welcome to all Harman DTS employees joining us. With this acquisition now complete, we have added engineering and AI capabilities that truly complement what we do. This, in fact, strengthens our engineering global business line and helps us accelerate AI-driven product innovation for our clients. In fact, this integration also opens new regions and high-growth industries and allows us to take on larger and more complex transformation programs. As our teams come together, we look forward to entering new markets, building deeper client relationships, and turning innovation into long-term value. Finally, the guidance for Q4. In Q4, we are projecting sequential IT services revenue growth of 0 to 2% in constant currency. With that, I will hand it over to Aparna for the detailed financials. Thank you.
Thank you, Srini. Good evening, ladies and gentlemen, and wish you all a very, very happy new year. Let me share a quick update on the financial performance for the quarter ended 31st December 2025, after which we will open up the floor for questions. Our IT services Q3 revenues grew 1.4% sequentially in constant currency terms and 1.2% sequentially in reported currency. It also grew 0.2% year on year in reported currency. Our constant currency revenue growth numbers included 0.8% contribution from the Harman DTS acquisition that was closed in Q3 of 26. Our operating margins for the quarter was at 17.6%, an expansion of 40 basis points over the adjusted operating margins for Q2. It also expanded 10 basis points on a year-on-year basis. I would like to highlight that this is one of our best margin performances in the last few years. As we move into Q4, we will need to factor for the incremental dilution of Harman DTS acquisition. Our endeavor, as always, will be to maintain the margins in a similar band that we have delivered in the last few quarters. Adjusted net income for the quarter was at rupees 33.6 billion rupees, and adjusted EPS was at rupees 3.21. This is an increase of 3.5% sequentially and flat year-on-year. Moving on to our market unit and sector performance, I will share some of the commentary. All the numbers that I will share are in constant currency. Like Srini said, this has been a fairly broad-based performance with 3 of our 4 market units growing quarter on quarter and 2 of the 4 market units growing year on year. Americas 1 grew sequentially by 1.8% and grew 2.8% on a year-on-year basis. Americas 2 declined 0.8% sequentially and 5.2% on a year-on-year basis. Europe grew 3.3% sequentially and declined 4.6% on a year-on-year basis. APMEA grew 1.7% sequentially and grew 6.6% on a year-on-year basis. Now for the sector performance. BFSI grew 2.6% sequentially and 0.4% year-on-year. Health grew 4.2% sequentially and 1% year-on-year. Consumer grew 0.7% sequentially while declining 5.7% on a year-on-year basis. Technology and communication grew 4.2% sequentially and a 3.5% year-on-year. EMR declined 4.9% sequentially and declined 5.8% year-on-year. You can note that 4 of our 5 sectors grew sequentially and 3 out of our 5 sectors grew year-on-year. Further, Capco growth was flat on a year-on-year basis for the quarter. Before I move on to other financial parameters, I would like to draw your attention to 2 specific one-off charges that we have recorded in our P&L for the current quarter. These charges are not included in our IT services segment operating margins, but have impacted our net income and EPS. First is an increase of 302 crores for gratuity expenses due to the implementation of the labor code. And second is regarding a restructuring exercise that was completed during the quarter, and the impact of this is about 263 crores. I would like to confirm that we've now completed the restructuring that we want to and do not anticipate any further charges. Our operating cash flow continues to be higher than the net income and stood at 135% of our net income. Our gross cash, including investments, was at $6.5 billion as of 31st December. In Q3, our net other income rose 15% sequentially. Accounting yield for the average investments held in India was at 7.2%. Our effective tax rate was at 23.9% for Q3 26 versus 24.4% same time last year. In terms of guidance, to reiterate what was stated by Srini, we expect our revenue from IT services business segment to be in the range of $2.635 billion to $2.688 billion. This translates to a sequential guidance of 0 to 2% in constant currency terms. Our guidance includes the incremental 2 months of revenue from the Harman DTS acquisition. It is impacted by fewer working days in Q4 and delay in ramp-ups in some of the large deals that we had won earlier this year. Lastly, I would like to share with you that in our recently concluded board meeting, the board of directors have declared an interim dividend of rupees 6 per share. With this, the cash distributed to our shareholders during the current financial year will be in excess of $1.3 billion. And we've been able to significantly exceed the minimum floor in our capital allocation policy for the block for the year ending FY 2026. With that, I'm going to hand this over to Nisha for Q&A.